Wealth is getting much bigger. If you think about that, we were talking about 14 trillion in 2024, expected to reach 20 to 25 trillion dollars in 2030. So because of that, family holdings and family offices have become bigger and more sophisticated.
Hello and welcome to this week's Tea Break, where we dissect the latest investment trends and strategies shaping the future of wealth management over a cup of tea. Joining me today is Silvia Calvello, Global Head of Private Investment Banking at Crédit Agricole CIB. How are you?
I'm very well. Thanks for inviting me.
And what tea have you gone for?
I actually decided to go for a black tea. Black tea is more oxidized in comparison to a green tea.
Interesting.
That preserves the flavor, the freshness of the tea.
And I've gone for the mint tea. It just helps me digest my food in the morning. But we have a lot to digest today, actually. We have this wonderful opinion piece from Malik Sarwar, a former senior private bank at Citi, about Donald Trump's tariffs, political announcements and market reactions. He says why Trump's tariffs failed to bend it like Beckham. He talks about volatility. Is this geopolitics now the number one concern of your private clients?
Diversification and mega trends are a major concern for wealth investors during uncertain times, which I think is kind of true. Just to give you a couple of figures, I mean, infrastructure investments are supposed to reach $90 trillion by 2040. The electrifying economy will require $3 trillion by 2030. And geopolitics is a major concern, but not just for family holdings or wealth investors, I would say for everybody. It is a major concern for sovereigns. It's a major concern for financial institutions, for corporates, whether they are owned by families or not. But we are there, I guess, to make sure that we will be aligning solutions to the long-term needs of our clients.
We have this interesting piece from Robert Weber at multifamily office Alti Tiedemann Global, and his view is that wealthy families have to take a much more global rather than a domestic perspective. Is this an opinion you agree with?
I think so. If you look at the asset allocation by geography, today between 40 and 50% is in the US, 27 to 29% is in Europe, and the rest mainly in Asia and the Middle East. If you think about family holdings, as I said, they have a very long-term strategy. So if they invest in what they can control, in what they do understand, and that depends very much on their historical assets. It depends on their geographical presence. It depends on the various opportunities. And as we said before, mega trends will allow for many opportunities in the world. So yes, you need to have a global approach, and banks like ourselves are there to be global.
Private markets in Asia are booming as high net worth individuals and family offices seek diversification, resilience and high returns amid the market volatility and intergenerational wealth transfer. But some experts caution that past returns may not persist due to high interest rates and rising defaults and market saturation from, record dry powder. And many private banks were similarly obsessed with the alternative investments back in 2008 and were recommending huge allocations to hedge funds for their private clients. And we ended up with a liquidity issue with families stuck in a loss-making investments they could not cash in. Is there a danger of a similar crisis looming today?
Wealth is getting much bigger. If you think about that, we were talking about 14 trillion in 2024, expected to reach 20 to 25 trillion dollars in 2030. So because of that, family holdings and family offices have become bigger and more sophisticated. And as they become bigger, they tend to do direct deals and larger deals. It doesn't matter what's the asset class. It could be a private asset, a private equity, a private debt. But because they are long-term and more specialized, they tend to balance the portion of liquid versus the portion of illiquid assets. So I don't think that we will fall into a kind of liquidity trap as it has been in previous crises. I think that because of this sophistication, they will have the capabilities of managing it. And once again, banks like ours are there to make sure that we will be able to do that.
As many of our viewers have noticed, Yuri's not here with us today. He's on a field trip to Luxembourg, but he recently presented the Wealth Tech Awards to private banks that have made the most, the massive strides in digital transformation. I asked him whether it was mainly the biggest players making waves. And he told me, yes, it's true that the giants like Bank of America, JP Morgan, UBS, and BNP Paribas tend to dominate the rankings. They've got the scale, the resources, the massive client bases to fuel that kind of innovation. But what stood out to him is how much momentum is also coming from the mid-sized players. A few years ago, he said no one would have imagined giving top, digital innovation award to traditional Dutch bank like Van Lanschot Kempen, but they've completely overhauled their culture and the tools they provide to advisors. When clients are choosing their private bank, how much weight do they give to digital capabilities versus other factors like the relationship between private and investment banking, or the broader investment banking offering?
When you talk about a combination of investment banking and wealth management service, this is really at the heart of our strategy. That's the reason why we decided to create private investment banking back in 2020. But it's not just this combination, it's also innovation that is important to client. And just to give an example, we've been pioneering sustainable finance since the very first beginning of it. We've been co-founding the Equator Principle back in 2003, as well as the Green Bond Principle. And this is extremely important because today, 70% of the revenues that we generate are made with clients whom we carry out sustainable finance type of activities. And digital, to me, goes along that. Digital, to me, is just the common denominator of all these various success factors that are extremely important to bank.
Mm-hmm. And Yuri's also been digging into this space, and I asked him where he sees the real innovation coming from in his research. He pointed out that while major US players are leading in some areas, there's a huge amount of innovation coming out of Asia. Banks in that region have been exploring the power of AI and big data for quite some time. He mentioned Axis Bank in India as an example of where cutting-edge tech is emerging, and Chinese banks are quickly catching up as well. And we have this amazing question from one of our readers from Switzerland, Michael Welty. He was at Rail Bank in Geneva. I think is now at Bank Heritage. Michael has a wonderful question for you, Silvia. He says, I am personally disappointed about the universal bank's lack of personalization. We are always hearing about the big names, but is there more innovation coming from some of the boutique offerings, the more independent private banks from Switzerland, which is still the main center of expertise for global wealthy clients?
Well, thank you very much, Michael, for the question, first of all, because that allows me to say that Andoswes Wealth Management in Switzerland just announced that they would like to sign an agreement to buy Banque Thaler. Banque Thaler is a Swiss independent private bank founded in 1982, which is recognized for its excellent services in private banking and wealth management. And that comes after the acquisition that was made in 2024 about the group Peter Kam, which has been one of the most significant transactions in the industry in the past 10 years. So, to answer the question of Michael, I think that there's a lot of innovation into independent banks. That's the reason why universal banks do look into independent banks. And I think that this innovation will not be diluted when those banks will be integrated into universal banks. And on the contrary, it will be amplified to new markets and new clients.
Of course, Silvia, and there's a lot of innovation in the teas that we drink nowadays. You get all sorts of teas. Silvia, thank you so much for joining us today.
Thank you to you, Ali.
Unfortunately, that's all we have time for. Thank you for watching this week's Tea Break. Make sure you watch our weekly Tea Break either on the PWM website or the YouTube channel. See you next week.